My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Happy Friday, Black Friday here in the US. Lots of sales going on, but you know where I like to look for sales? In the stock market. And again, not just the stock market, but let's be fair, crypto and commodities. So here we are, my trading game plan on this Friday. Markets close at 1 p.m. for the stocks today. And again, what we're going to be looking at is where the markets are headed today, but also into next week, because now we're getting to a point where we've rallied off of the lows for 5 days. Markets are nearing a maximum extension move and likely going to start turning back down. This also will coincide with the fact that starting on Monday, institutional money will be beginning to get back involved in the market. Remember, they took the whole week off, right? They got that luxury to just walk away for a whole week and then come back after the holiday weekend here coming up. So that's where we are right now. Let's jump into the S&P futures. You can see the futures had kind of a weird thing going on. The CME had an outage this morning for literally hours and hours and hours. The CME just reopened right up here. So again, look at this candle here. This was before midnight last night Eastern time, and we did not get the CME futures to reopen until 8:30 this morning due to an outage. And again, if you're like me, you're starting to say, wow, there's been a lot of outages in and related to the financial markets recently. And you have to wonder again, are there vulnerabilities as supercomputers come online, data centers, AI? What type of risks are lurking out there due to these new factors being introduced? So just something for us to think about as investors in this world. Okay, so let's flip over and just go through these charts today. This is your S&P weekly chart. And again, we still are in a position where we're still being encapsulated by this parallel. And again, what we're really watching here is we've had a great bounce on the S&P, but we're not even close to getting back to this trend line, which is really where the big test for the S&P is going to be. If we can get above this trend line, okay, game on. We'll move above, let's say, 7,000 on the S&P, maybe even continue to climb into early 2026. But history has shown us that this parallel has literally picked every top and bottom in the market, from the COVID lows to the bear market lows, to the liberation tariff sell-off in April 2025 lows, to the bull market of 2021. That was the high. These have been the lows. And so as a technician, I have to go on the assumption that this is a major high until proven otherwise. Now, in that same realm of analysis, if we flip back to the daily chart, I'm watching very closely on this fall from the all-time highs to this low, and noticing that we're getting into some Fibonacci retrace levels. If we look at this, you can see the 786 Fibonacci is right here. In addition, we have a gap fill just above it right there. So this is going to be right in here. To me, this is going to be the first big test on this bounce for the S&P 500. Now, for me, I'm keeping an eye on other things as well. I'm taking very close note that the VIX, the volatility index, has fallen 40% in 5 days. That's a massive fall for the VIX, right? In addition, you know, and again, I'll go over what the VIX is in a second for those of you that are newbies, but look at how close we are now to a support trend line. Notice how the VIX, which is the fear index, has been making higher lows all along here. It would make sense that the VIX could touch this 1660 level right here and then potentially turn up. Now, the kicker is, what is the VIX? For those of you that don't know, the VIX is our fear gauge. It's when it's down, it shows less volatility, aka complacency. And when it goes up, it shows fear starting to come in. And so if you use that in conjunction with the S&P 500, for instance, that's approaching the 786 Fibonacci, the gap fill has been up for basically now almost 5 days, or 5 days up in a row, a big bounce. You start to kind of connect the dots here that the VIX is getting towards support, which would trigger a bounce, which would be an incline in fear. Fear would go up. The markets are just about at a topping point where they're going to hit resistance. So for me, I'm looking to start to accumulate some shorts today and on Monday, especially if the VIX tags 1660 and the S&P tags those key levels we just discussed. All right. Now, if we flip over to the QQQ, take a look at what we're seeing here. So we had this beautiful parallel channel, right, that goes back to May of 2025. And notice how the high end of this parallel, right, here all the way through these levels, right, all the way through, it was always giving us the top on the market before a pullback. Now, whether it was a consolidation here or a bigger drop or a very big drop, we just didn't know. But it's very clear this trend line was important. The low end of the parallel was also important until it was broken recently. And what we're watching for here is, can the QQQ revisit this? Now, this is the kicker. What we know from technical analysis is when we've been above a support line, right? So we've been above and we break, what happens to that line? It no longer is support, right? Because it's been broken. What does it become? It becomes resistance. And so in this situation, you had support, 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 breakdown, retrace. What should happen here? We should get rejected off that level. Very important, a key component of technical analysis. Support becomes resistance, resistance becomes support when they are broken. Okay, so that's just something I wanted to go over there. Now, flipping over to the dollar today. The dollar, we talked about this last week. I put this trend line in. Look at how it just came right down to the trend line and is trying to hold it. Now, again, we'll have to watch and see, because what are we watching here before our eyes? Essentially a wedge pattern forming, right? You have this upsloping trend line slowly getting tighter and tighter. You know, again, at some point, price is going to be forced to break down or break to the upside. So again, the dollar is coming in. Interestingly enough, we are now only about 2 weeks away from the next Fed rate decision. Now, a couple weeks ago, that Fed decision was looking like no cut at all. 30% chance of a cut 2 weeks ago. As of today, 87% chance. In terms of the Fed watch tool, that's a pretty darn good bet that it's happening. I mean, that's almost what we would almost call a sure thing in the Fed watch tool game. All right. So again, we are expecting a 25 basis point cut in December, which is part of the narrative for why the markets have bounced. The other question is, what's the new narrative going to be that's going to bring the market back down? Is it going to be like, oh my goodness, the economy's weakening? Or is there going to be other factors? These are things we'll have to watch and see. But what I always do is I follow the charts. Number one, 10-year yield, we saw it break down as soon as the Fed watch tool flipped to a likely cut. The 10-year yield came down. It came right down to this pivot low connected to these pivot lows here. And that's where we bottomed out overnight here, the 10-year yield getting a small bounce on the day. Now, one of the charts that I think could change the narrative back to bearish is this one. This is the Japanese 10-year. I've gone over it. We've talked about how this could be the lurking black swan that could really freak the markets out. Because again, remember, Japan has 240% debt to GDP. So they have massive amounts of debt compared to their GDP. Now, the US dollar amount has way more debt, but Japan, again, is a smaller economy, right? So its debt to GDP is what's important here. Now, interest rates in Japan have generally historically been, at least for the last 20 plus years, really low, even negative interest rates, right? Imagine you buy a house and they pay you to buy that house instead of you paying interest. I mean, that's how wacky this stuff has gotten. But because of the debt, we're starting to see the 10-year now starting to skyrocket. Now, notice how when the 10-year in Japan topped and pulled back last week, the markets bounced here in the US. So on my bingo card, I have watching the 10-year here in Japan. Do we take out this recent high around 1.85? If we do, I think that ultimately triggers a sell-off in the US markets. And again, many people would say, well, why does that even matter for the US markets? It's actually very intertwined. Remember, the US has high debt to GDP as well. And so if this is showing us that people or countries that are buying debt are now a little bit more nervous, meaning they're demanding a higher interest rate, now that affects the US interest rates here. The 10-year in the US could start to turn up even if the Fed is cutting rates. You could also look at it as the yen carry trade, right? Where people borrow money really cheap in Japan and get an easy interest rate that's better in the US. If that starts to shift, it dries up the liquidity in the markets, in the investing markets as well. All right. So lots of different factors here. Now, flipping over to a couple charts. Charts today, even though it is a short trading day, I am watching very closely the beautiful trend line right here on AVGO. This is Broadcom, right around 410. There'll be a massive wall of resistance. This would be a fantastic shortable level up here, guys. Keep this on your radar. All right, so that's one that I'm watching. Right now, AVGO is actually trading basically around the flat line, down about 50 cents pre-market. Here we have a chart of NVIDIA. And NVIDIA, for me, folks, what I'm really watching on this is you have this zone, right? We have this zone of support. And again, you could even extend it out a little bit more. But essentially, NVIDIA going back to July broke into this range, chop, 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 got above, came back, then pushed up, and now it's broken back inside of this. NVIDIA has to hold this 167, 165 level right down here. But this is why you're starting to see a little support on NVIDIA, because you have all this sideways chop in here. Now, if it breaks below this area, let's say around 165, that's where things can get nastier, and we likely head down toward the 150 level, which has been my longer term. Even when we were trading above 210 recently on NVIDIA, I said, guys, this will come back to about $150. That is going to be our former pivot high from 2024 and likely will become major support. Another chart I'm watching, Robinhood getting a classic bounce. What we discussed on the QQQ chart there of support becoming resistance is exactly what we're looking at here. You have support, you have support, and you have support. And even right here, it kind of tried to break and then bounced and then it broke. Now, what's this going to be? Resistance. And so for me as a trader, I'm watching very closely the 137.50, 138 level on Robinhood for a potential rally into it, but then a pullback following that level. All right, flipping over to Bitcoin today. Bitcoin continues to rally. I did tell you guys that I did go long on Bitcoin with members of Smart Money Crypto. I also went long ETH. I went long Cardano. I went long SUI. I mean, I just, listen, when the charts are when you follow the charts, especially in crypto, things tend to hit support levels very, very often. Now, as I've been crystal clear, I still think we're going down to 73 to 75,000 eventually, right? But if we flip back to the charts, there has been a level that I've talked with you guys about that would be the level where we could get up to, right? And it's really right in here, right around 100,000. And so what's amazing is last week when I was talking about a bounce back to 100,000, we were still trading down around 86,000. It was touch and go. Well, guess what? We're now back to 92,300. Remember I should say earlier this week, right? I keep on saying last week, but that's just because to me, it seemed like a weekend with Thanksgiving. But in reality, earlier this week, I talked about my favorite opportunities. One was strategy into massive support right here. Look at this, closed at 175 and change on Wednesday. It's trading at 100 near 182 now today. So great move on strategy as it begins to push up. And this should have a significant bounce, guys. I mean, you could be looking at a bounce. If we get back to about 100,000 on Bitcoin, we could be back to 220 on strategy, which is still another basically $40 of upside. Now, listen, if we don't get quite back to 100,000, it could be a little bit less than that. But I still think this chart bounces, albeit maybe goes lower later on when Bitcoin does finally turn back down. But that's been a good one, guys. Another one of my favorites here is also crypto related for a stock, Circle. I mean, how do you not like an all-time low on Circle double bottom right here, right in this zone here? And again, we've been kind of flagging and then starting to turn up. But same thing with this. I would see this going back potentially over $100 on Circle. It's trading at 70 bucks. Again, if we can rally back to 100 on the chart of Bitcoin. All right. And again, just keep in mind, remember, guys, I'm a swing trader. So I'm going to be watching the charts as we get these bounces with my own positions. And when I think time is up, I'm going to take it off the table. And so it's not something like I'm not saying, oh, I love and I'm going to buy MicroStrategies for the long term. I couldn't care less about MicroStrategies in the long term. I'm using it as a trading vehicle to essentially make money for myself and my family, right? And that's really what investing should be about. It's about producing results. And that's why I love charts, because they give me the probabilities to do just that. Okay, next up, let's go to gold here, guys. Gold is pushing above this little wedge pattern. We need to monitor this. If we close above and confirm, gold will likely head back to our all-time highs. I've been a little bit skeptical of gold here because it just didn't seem like a good enough flush to kind of take the weak hands out. But listen, the chart is the chart. And what we have to monitor, do we close above today? And do we confirm on Monday? If we do, double top at around 4,400 could be in the card. So I'm really focused in right here on this price action today, and then whether or not it confirms the breakout of the wedge pattern on Monday. Here we have a chart of silver, and look at the move on silver. It's back to its all-time highs here. This is what we would call a triple top, but again, triple tops, believe it or not, are not as strong resistance levels as our charts for double tops. Double tops are the best. Triple tops are good, but it's already a weakened level at that point. So let's watch really closely here. If we break through and confirm above this double top or this now triple top, we're looking at around 57 as our first stop, and then 60 to 62. But very impressive price action on the metals. And again, it just shows this insatiable demand, not only from retail, but also from Federal Reserves around the globe, central banks, governments. Everyone is saying, wow, we don't trust fiat currencies. And by the way, I agree with that mentality 100%. How do you trust a fiat currency when it can just be printed ad nauseum, right? I mean, it's just like, you're just basically asking to lose money over time if you hold dollars, or if you hold yen, or if you hold anything else in terms of a fiat currency, until it gets backed by something physical that you can actually, say, okay, there's a value to this and it can hold its value. All right, a couple other things to go over. I did go long oil the other day here, a couple days ago, right down here. So far, so good. It's creeping up. We're watching this little parallel here. We need to see if we can break out of that level. All right, again, still have our cup and handle pattern. I discussed why I decided finally to pick up a long on oil down here. It had to do with risk reward, with the failure of the cup and handle so close, about 2% away. It made sense to give it a shot with a reward of over 10% risk reward, at 2% risk to about a 10% reward with a bullish pattern. I like those probabilities with that risk level. All right. Next up, natural gas, which again has kind of been chopping around the last little bit. It is creeping up again today here, folks. Again, I'm still watching this because there's still a ton of resistance right up here. We still haven't tagged it. But again, for me, I'm going to be straight with you guys. I was originally thinking about shorting it right here, starting a position. Because we got so close and are pulling back, that's off the table now. Instead, I'm basically just going to this level. If we get here, yeah, I'll short it. And listen, it may not get there. That's okay. But for me, again, there's multiple factors going into this, including risk versus reward, what I know about technical analysis. When a level gets close and then it pulls back, that's essentially like a kiss of that level, which weakens that level, which again, if we hit it again, it's weakened, it could break through. There's a lot of factors that I teach in the Winning Trader series. And by the way, our courses just through Sunday are still on sale at 50% off. So don't forget, guys, again, basically last chance for at least 6 months to get 50% off our courses here at Verified Investing. Pretty cool stuff, guys. Again, game-changing, financial future-changing. It is really remarkable. Education, it can't be stressed enough how if I had that when I was beginning, if I had the knowledge, if I had something like this, even this game plan, the amount of potential profits that I could have stacked early in my career versus losing money, night and day. Night and day. I mean, just think about compounding that when you don't lose money for years, but instead you make even, or even if you break even. It's just really, really incredible. All right, guys. Again, short session today. Doing a little bit of a shorter game plan today, but that's okay. We'll be back Monday. I also will do the weekly wrap up at the close today, or again, it'll be normal time. So 420 today. I'll have the weekly wrap up for you guys. So same time as trading the close Monday through Thursday. And as always, folks, thank you so much for tuning in. Much appreciated your support. Remember, all charts, no BS. Take care.